So alright guys, so welcome back to my YouTube channel. So guys, in this video I'm going to be teaching you guys on how I became profitable in the forex market. So down from my strategy to my risk management to the money management and trade management. So I'm going to be teaching you guys, I'm going to be giving you guys a deep explanation, a deep breakdown on how I'm using these things to become profitable in the forex market. So for those of you that don't know me already before, I am Senior Eda, a swing professional forex trader. And some of you that already know me already, you know what time it is. So you guys at the top, man, one love. So guys, so without me not just wasting a lot of time, let's just get straight into the video. So as you can see on your screen, now this is my strategy. So what I did here, I had to take my time to write this out. The strategy, which is the model, the risk management, money management, and trade management. So as you can see, the first thing that you need to watch out for, first of all, as a smart retail trader, what are you supposed to do in the forex market? You need to observe your structure, wait for price to pull back to your 4 hours order block, wait for either liquidity or inducement sweep before you take your trade. So now if you look at it now, now the first thing we need to do is your market structure for directional bias. You can use your time frame, 1 week, 1 day, and 4 hours. Now let's go into the charts. Let me give you a breakdown of what I'm talking about. So now directional bias is the market structure. This is what we are talking about. This is for the bullish bias. This is for the bullish bias. And this is for the bearish bias. So what is market structure? The movement of the market. Like what is it a bullish trend or a bearish trend? So this is the market bias. Then the second step is wait for break of structure, which is your BOS. Now, where is your break of structure? This is your break of structure. This is your break of structure. Your break of structure. Your break of structure. Yeah. And for your set bias, this is your break of structure. Break of structure. So first step, your market structure, which is the directional bias, and your second step is your break of structure. Follow me step by step. So now, your third step is to pull back to 4 hours order block or 1 daily order block, or a demand or a supply level, depends on price action. I'm going to show you guys, but majorly 4 hours order block and 1 daily order block. So now after your break of structure, expect a pullback down to your 4 hours order block. Where is your 4 hours order block? Around this area. This is your order blocks. These are your order blocks. Also, this is your order block area. This is your order block area. So now, where are supply and demand areas? Supply areas. No, these are demand areas. These are demand. For a bullish market structure, you learn to take your price in your demand areas. Therefore, a bearish market structure, then you learn to take your price in a supply area, which is your entries. So these are supply for selling buyers, and these are demand for buying buyers. It is very, very easy. As a smart retail trader, first thing that will need to come into your head whenever you enter the market structure is that observe the bias of the market, what kind of structure, if it's a bullish trend or if it's a bearish trend. The second thing you need to watch out for is your break of structure. Now after your break of structure, expect a pullback down to your 4 hours order block before you take any trade. Now what is the next rule? Wait for liquidity sweep and inducement sweep. Okay. Now I want to give you guys a full breakdown on this. Normally you will see price, I know those of you have seen price like this before. You see price like this. those of you have seen price like this. Give you guys. You see? Now, I want to give you a clear example of what you are seeing. From this structure that you are seeing on the screen, this is a bullish bias. Now, what is the rule? The fourth rule, wait for liquidity sweep and inducement. Let me explain. Now, if you look at this structure, first of all, there was a break of structure from here. There was a break of structure. Yeah, there was a break of structure. Now, there was another break again. There was another break. And there was another break again. Now, if you observe very well, you will see that when price was moving like this, you will see that it was giving higher highs and higher lows. And don't forget, in Forex, anywhere you see higher highs and higher lows, you see on top those highs and under those lows, those are what we call liquidity areas. Anywhere you observe break of structure, a high or a low, those zones, those highs and lows, liquidity is resting on that place. So you see this low now, liquidity is here. Liquidity is on this low. Why is there liquidity here? Because there is an internal break of structure. There's an internal break. There's an internal break. There's an internal break. So this low automatically now turns liquidity. Simple. It is very, very easy. There are a lot of structures like this in the Forex chart. Whenever you see a move like this, internal break of structure with the overall break of structure, this internal break of structure, these lows that cause this break of structure now turns liquidity. That is it. Now for your pullback, this is your pullback. Price tapped into your 4 hours order block. And that was how you swing your trade. You enter from here. That one is on the next step. Then let me explain inducement. Now, on this second move, you saw what price did. Price moved up, went down, and takes out this internal break of structure. This internal break of structure. And takes out, so this low automatically now turns what? Liquidity. This low now turns liquidity. And when you observe, you saw that when price still moved up, price takes out this high again, which is this internal break of structure again. So the same low now turns liquidity. You need to be very, very smart here. You need to observe this price action. Here now turns liquidity. Why here it turns liquidity? Because there was a break of structure. There was an internal break from these highs. So the lows is now liquidity. A lot of money are resting under these lows. Either late buyers or early buyers, their money are resting under these lows. So you need to be smart. Now, before price down went up and takes out the external break of structure, because this is the main break of structure that you need to be watching out for. So this is the low that you need to be looking out for your entry. Now, after this break of structure, if you saw what happened, price came down. This is now what we call inducement. Follow me. This is what we call inducement. You saw what happened after the external break of structure. Price went down, and now deceive traders that okay, yes, he wants to start buying, because a lot of traders will enter from him because there are some breaker block traders, and all these are short term. They might still catch price there and they'll still be in profit, but price will definitely come down and sweep them out. So if you really know how to trade this one very well, it's there for you. On this area, we don't know how to trade like that. So we need to observe. Now, price came down, it deceived buyers that okay, yes, we want to start buying. As they are going up, a lot of traders will enter from here. Some will put their stop loss under here, and price will just go and come down and sweep them. So this pattern now, this move that we saw here is what we call inducement. Inducement is more like a trap in the Forex market. Is inducement. Inducement is more like a trap in the Forex market. While everything that you are seeing in Forex, both the candlestick, your money, everything is what we call liquidity. So this is a trap. Then you saw that price came down, swept this inducement, swept this liquidity, and tapped into your what? Your 4 hours order block. And that was how we enter the trade, and boom, TP hit. It is very, very easy. Now, what is the strategy as a smart retail trader? First of all, observe your market structure. What kind of buyers? After the buyers, then you mark out your break of structure, expect a pullback down to your 4 hours order block or your daily order block before you trade. Now, before you take entry in your daily order block or your 4 hours order block, you need to wait for liquidity sweep and inducement sweep, or liquidity sweep or liquidity sweep or inducement sweep. Either of the two, any one. But in most cases, the one that is always present in the market is always liquidity and inducement. At the same time, price is going to take the both of them then before it to move. That is it. Very, very simple. And now, what is the next step? The next step is execute and swing. This is the part I just love the most. Now, after liquidity has been swept, after inducement has been swept, place your trade. Put it under this low and swing what you want to swing. That is it. So the confluences, in order for this strategy, in order for you to have clarity that okay, yes, so this strategy that I'm training you, this setup that I'm seeing in this market, how am I going to have clarity that okay, yes, this thing is going to work? So you need validations in Forex chart. So validations in another word is what we call confluences. So in confluences that I use that I'm be profitable every time is always working. My profitability with these confluences is like 70% out of 100. Now I use my Fibonacci retracement and trend line in most cases. Now let's go to the chart. Let's go to the chart. Now you are seeing this buying structure. Fibonacci, why I use my Fibonacci in most cases is to get the pullback, the retracement pullback. Now you put it from the low that start the break of structure, then put it at where the retracement started from, which is the high. So as you are seeing this green zone. This green zone is what I call my order block area. So once I see price in this order block, in this green zone, I take my entry. This is just the way I trade. You don't need to complicate things for yourself in trading. It is very, very easy and simple. Do you get? It is easy and simple. Don't complicate things for yourself. Now, Fibonacci retracement gives you that edge of clarity that okay, yes, price will definitely come to this zone and buy from here. So Fibonacci retracement is one of the major confluences that I use to get my order block entries. Do you get? It is very, very easy. So if you have not watched when I explain about this Fibonacci, I think you go and check my past videos. When I was, I think, explaining different setup, and I explained how I use this Fibonacci. So go and observe those videos. So you're going to understand what I'm talking about. This green level is my order block area. This golden zone level is the middle. I don't trust this golden zone level, but this is why I use it for my retracement. That I do cash my move, which is the continuation. So I use Fibonacci retracement to have a validation and a good confluence and a good clarity to enter and to take my trade. That is just it. Then what is now the next thing? The next thing is your trend line. Now for your trend line, if you look at it now, let's just draw the trend line. Let's see. You have to connect your channel. Connect your channel. Connect your channel. Connect it. So in most cases, I use trend line. Depends on the kind of structure I'm saying. I use trend line in most cases. So trend line and Fibonacci retracement are my biggest confluences that I use in entry. In entry, my setup. It is very, very easy. So my entry model is I entered. I'm seeing most of you asking me in the comment section like what kind of entry model I use. I'm a swing trader, so I entered from 4 hours time frame. I don't go to 1 hour or 15 minutes to trade. No, that is not me. I will look 1 week for my directional bias, go to 1 day, spot where I need to spot, then go to 4 hours and do my main analysis and execute in 4 hours. So what I do majorly is to set limits. I only execute. You get to set limits. Just set my limits and hold on and wait for price to get to my area, trigger me in, and that's how I keep making money. So it is very, very easy. My entry model is 4 hours time frame. I don't use 1 hour or 15 minutes. So that's it. So now that leads us to the next phase, which is risk management. Now, risk management, always 1:33 arrow risk to reward ratio. So for those of you that know me very well, you know how we do it here. You know how we do it. You know, always 1:3. It is not your father that have the money inside this place. Enter this place, collect your share, and get out. Do you get? So before you take any trade, these are the most important questions that you're going to ask yourself. Okay, this trade that I want to take, how much am I risking? How much am I willing to risk on this setup? Now, before you take any trade, always make sure that, okay, yes, you're always risking, you're always trading 1:3, which is your arrow. Now, let me give you guys an example of the 1:3. Take your long position, you put your stop on that low, and you target 1:3. See, it's very, very easy. You can see it. You can see it. It is very, very easy. 1:3. Once price gets to this place, leave the market. The market should close you out. It is simple. Now, what is the next step? In percentage, always risk 0.1% of your capital. Now, let me show you. I think you guys must be seeing it on your screen. Yeah, so I think you guys can see it on your screen now. So now let's do it now. So imagine you have $100. They are risking 0.1. So you're always risking $10 to have what? Which is 1:3 times 3 to have $30. Stick to this risk. Not be your papa get money with this at this place. At this early stage, learn to grow. Learn to grow before you start overlotting, before you start stacking. For now, learn to grow. Once you grow, you have a lot of funds, you can split your money and start overlotting. But for now, this is not the time to do that. Trade conservatively. Don't compare yourself with those big traders that you are seeing online. Be smart. You are trading against a lot of smarter people in this market. You're not smarter than the big banks. You're not smarter than the nakabas. So you need to be smart here and flexible. Don't be rigid. So if you are taking any risk, always 0.1% of your capital to have what? Times 3 of that your risk. Simple, that's it. So don't complicate this for yourself. You are doing well. So now, let's go to money management. Money management. Now, when price action misbehaves around losses with impulsive moves, close trades and wait for another setup. You see this one here? I have done jazzy on this money management. In fact, they should crown me on this. I know where to get at. If I'm seeing a useless setup, I know where to leave my trade to give me money because I master price action. There are some setup that you will see in the market. See, don't bother yourself. Don't just bother yourself. Once you see that price is coming to your entry aggressively or impulsively, close that limit. Now you might say, okay, yes, you want to take the trade and let's see what price action will do. Now there's a way you will see price action. Let me enter the chart. Let me enter the chart. Okay. Now you see this area now. So this is 1 week of GBP AUD. Let's say this low now is your POI. There's a way you will see price action here. Okay, let me go to 1 day first. See it. There's a way you this is just a clear example of what I'm talking about. Now there's a way you see price action like this. Like this. Don't wait for price to come and sweep you out, to come and hit your stop loss before you close this trade. You need to learn how to manage your money here in this forex market. Everything is not about risk. Don't be rigid. You need to be flexible. I don't know how you're working for your money, but me, I know I'm working for my money. I'm not plucking it from the tree. So if you see setup like this, you are seeing this impulsive movement inside your stop loss. Just okay, let's imagine you take entry here. This is a good setup, self. You take entry and your stop loss is now under this low. The stop loss is now under this low. Now price was giving you money. All of a sudden, price now came back to your entry. You are seeing this kind of move. You want to leave it to eat your SL. You are a stupid trader. This is no matter of risk. You are just a stupid trader. So if you understand price action, you get out of this trade because this thing is not your business. At least the money, maybe if you are risking $50 now, when you saw price here, it was not like 28 or 29. If you close down at this, it will still give you. You still have some money left. Do you get? So it's better know when to get out from a stupid trade and know when to leave a good trade. How can you know all of these things with price action? Understand candlestick. How can you read candlestick? Between buyers and sellers, who is in control of this market structure? These are supposed to be your concerns in the Forex chart, not just strategy. Strategy is one part on its own, but you need to still understand price action. That's why if you go to all my bio, if you go to my Instagram bio, if you go to my TikTok bio, if you go to any of my accounts, if you check my link, you will see the kind of I say SMC plus price action. I'm not just saying just SMC. SMC plus price action. You need to know price action. What candlestick show you? That is what you're going to work with. Do you get? So you need to learn how to manage your money. That's for that. That's for that. Now, what's the next step? Trade management. Trade management. When the profit of 50% set to break even. This one, there's no need for me to explain many things. Now, if you see that, okay, yes, you take your entry from here. Price has got it to half of your TP around this area. Okay, set break even. Set break even straight up. This trade, you have already won this trade already. You have won this trade. So it's either two things. There's either price will come back and take you out, or price will go and hit your TP. It is what it is. That is trading. So what am I saying in essence? As a smart retail trader, you need to be smart in this place. That is why if you are watching all of my video, you will see me calling you a smart retail trader. I'm not saying as a retail trader. I'm saying smart retail trader. I know what I'm saying. You need to be smart here because you are trading against smarter people that are smarter than you. How much do you have in this market? Can you move this market? Do you have liquidity? Ask yourself. Are you smarter than the big banks? Are you smarter than the inner cabals? Are you smarter than the hedge funds? Those big companies? No. So you need to come into this place, collect your share and get out. Don't complicate this for yourself. It is always easy. As a smart retail trader, come into the market, observe your market structure. After your market structure, wait for a break of structure. Once you see your market structure, maybe a bullish trend or a bearish trend, mark out your break of structure. Expect price to come down to your 4 hours of that block before you take your entry. Waiting for liquidity or inducement to be swept before you swing, before you execute, or before you set things. You understand me? It has to be like that. And if you are using your Confluences, use Fibonacci retracement and trend line to have a good validation on that trade. You need clarity before you can take any setup in Forex. You need clarity. Some of you are just in haste. That's why you're always blowing accounts. Since this year, I have not blown any accounts. Calm down. Go for the knowledge. Go for the skill. Master what you need to master as a professional Forex trader. Money is inevitable. After when you master all of these things, money is inevitable. Money will find you. You don't need to complicate it. Just give yourself time. Master this game. Understand it. Be patient. Be self-disciplined. Stick to your rule. Journal your trades. If you hit stop loss, ask yourself, okay, what am I doing wrong? Why did I hit this stop loss? Learn from it and make sure that next time it should not repeat itself again. You understand me? And stick to your plan. Follow what you need to follow. If you hit stop loss, you go again. If you hit stop loss, you go again. If you hit TP 1:3, know when to get out from a stupid trade, know when to be in a trade. All of these things, put them all up. You just flexibility in Forex to take you far. Flexibility, not just sticking to your strategy and risk management. just strategy and risk management, you will cry. Don't worry. Don't worry. If you like, say senior elder has not come to talk to you today, you go regret your life. Don't worry. So it is what it is. If you find this video very interesting, do what to like, share, comment, and engage. You know what time it is. I love you guys so much. 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 Yes, it's only my love that I can give you. I cannot give you my money. I cannot give you anything. And do what to subscribe. See you guys at the top. One love. Cheers.